We've got the management of Glenmark Pharma with us, Mr. Mani, joining us to run us through numbers this time around. Mr. Mani, good to have you with us. Steady quarter. In fact, we saw debt reduction as well coming in FY21. What's the current debt on books now, Mr. Mani, and what is the expected targeted return in FY22?
So the current debt in the books is about, at a gross level, is about 4,670 crores, and at a net level is about 3,580 crores. So I mean, as far as the debt is concerned, we reduced about 210 crores in the current year. And also going forward, I mean, in terms of the margins, current year we did about 19%. We anticipate to do about 19 to 20% in the coming year as well.
Okay, what are the expected timelines for the Glenmark LifeSciences IPO? And do you think this will be a trigger when it comes to, an increase in debt reduction?
Sure. I mean, as such, the business has done quite well in the last year. So based on the business itself, we anticipate a reduction in the debt like this year and maybe a little higher than that. And as far as the IPO is concerned, we already filed a DRHP, but due to regulatory constraints, we would not be in a position to give you a timeline. And whatever Glenmark Pharmaceuticals receives in terms of from the IPO, that will be reduced. That will go to reduce the debt.
And give us a sense of the outlook on your domestic business in the quarter, and what is the outlook for the segment X the COVID products?
Sure. So in the last quarter, that is Q4, we did about 7.7%. For the year, we did in excess of 10%. These growths are in excess of industry growth rates. So I think in the coming year as well, we anticipate or expect to at least do at the industry growth rates or higher than that.
And what is the expected launches as well from your Monroe facility and the kind of contribution that we'll see from that to your overall financials in FY22?
So as far as Monroe facility is concerned, this coming year, we anticipate about 5 launches, largely in the areas of injectables and nebulizers. We've already done one of those. And basically, we expect the facility to ramp up in the next 2 to 3 years. Due to the way the timelines, it takes time to get ideas on those. So therefore, giving a guidance on the revenue recognition would be difficult at this time.
Sure. Mr. Mani would want to understand what is the reason for this sharp increase one is seeing in other expenses, because that's also impacting your margins on a sequential base.
Sure. So in this quarter, especially, we had a one-off in the sense we have put more inventory in the front-end market. So obviously, we had a higher spend on basically the freight. So that was about 30 odd crores. Also, there were some changes in the regulations on the CSR side. We spent about 10 to 15 crores. Also, on a yearly basis, if you look at it, Q4, normally we have a higher spend on the other expenses. But what we would like to guide is this year we did much lower because of the COVID. It was about 25.7%, but going forward, we look at it about 27%. So I think more than looking at sequentially, a year is a better way to look at it. And the overall EBITDA margin that we look at 19 to 20%, that's the way we would like to guide this.
What about the decline that one has seen in operational cash flows? It's dipped about almost 19% versus what it was in FY20, despite a 23% increase in EBITDA during the same period.
So basically, while our EBITDA grew 23%, in fact, our operating cash flows before the working capital changes was also up by 17 to 18%. As I said, obviously, our working capital, there was an increase of about 385 crores. Of which inventory was a big piece. As I just said, that during the Q4, we put quite an amount of inventory into the markets to look at the increased businesses, as well as there was some increase in the receivables, but also there were also some input taxes refunds which we are expecting. So I think in the coming quarters, it should correct itself.
Okay, fair enough. Can you also talk about the Candid Powder business, other brands like LaShield Scalpe, and just what the performance has been like across some of your key brands?
Yeah. So on our consumer side, we've done quite well. We've been growing in excess of about 25%. I mean, the Candid Powder brand is now in like 100 crore club, and also the other brands like LaShield and Scalpe all have continued to do well. So actually in the therapy areas that we operate on in terms of derma and respi and whatever we do in terms of in our consumer business, it's been doing very well. It's grown very well. And we anticipate in the coming years these segments to do quite well.
Okay, and will Q1 be one of the best quarters, you think, led by COVID-related drugs for the Indian business?
Can you repeat, please?
Will the first quarter on the back of COVID-related drugs, is it expected to be one of the better quarters in recent times?
We expect the quarter to be quite good. I mean, in line with whatever guidance we are given on the EBITDA, etc., and the sales growth also should be good. So I think in line whatever we saw in the COVID drugs, especially in the month of April, as you know, in May onwards, the COVID has definitely fallen down sharply, but we expect to be a very good quarter going forward. Yeah, at least the Q1 should be very good.
All right. And, any sort of message that you want to give out to your shareholders in terms of how your individual businesses and the individual brands are shaping up and how you see the growth of the company?
So on an overall basis, I'll say that last year, in spite of being a challenging year with COVID coming in place, we continue to grow our businesses across the key markets as well as the businesses. Okay. So taking that as a clue, while our overall business grew at about 3%, our EBITDA grew at about 23% and our PAT grew at about 25%. Also, we saw our margins expand from 16 to 19. So I think that based on all this gives us a lot of confidence that going forward in the current year, when we give a guidance of 19 to 20% and about a 10+% increase in our overall business, that should be a very doable one.
Good luck and thanks so much for taking time out and joining in. Thanks very much.